Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing in personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending March 24th, 2023. Looking at the market indexes for the week, the TSX, S&P 500, Dow Jones, Nasdaq, and Russell 2000 were all up this week. Oil and gold were all up significantly as well. However, oil was at a 15-month low starting the week because there's a lot of oil in storage, a 22-month high storage amount in the US. With the summer driving season coming up, it's likely that demand will come up along with China's reopening. It could also be that OPEC will come to the rescue by cutting production as well to bring the price up. Now turning to Canada, Canada's Consumer Price Index for February came out on Tuesday and the markets loved it. All the readings were better than expected and most were better than the previous month. The core CPI year over year, having stripped out the volatile energy and food, is now into the fours at 4.7%. Sadly, getting down to 4% is the easy part. Getting from 4 to 2 is the more difficult part. To make everyone feel better about Canadian banks and to show that it is unlikely they will be in the same situation as the US regional banks, the Canadian banks, like the largest cap US banks, are subject to much tighter regulatory oversight compared to the US regional banks. There are far fewer banks in Canada, and it is easier for regulators to stay on top of them. Annual stress tests on capital levels, as well as so called horizontal stress testing of bank liquidity, are performed annually. There's no such oversight for the SVB bank that failed, as its assets were below the required $250 billion asset threshold. In Canada, the Big Six are required to hold an amount of regulatory capital and bail-in debt known as total loss absorbing capital of at least equal to 21.5% of their risk-weighted assets. Finally, the Canadian banks, like their largest global peers, are held to a general liquidity standard, or what is known as a liquidity coverage ratio. The banks must have on hand at least 100% of an estimated cash flow draw over a 30-day period. Due to the fears and expected slowdowns in the economy, there are interest rate cuts being priced in the bond market on both sides of the border. With inflation still rampant, I would be very surprised if cuts happened without a full-fledged recession in place, which won't happen while labor markets are as strong as they are. And lastly, Canada's population grew by over a million people in the last year, 2.7% year over year increase, fastest in the OECD, which is the Organization for Economic Cooperation and Development, including 37 democratic countries. Our population increase was driven mainly by immigration. Turning to the US, the US Fed hiked another 25 basis points on Wednesday. That takes the Fed funds rate to the 4.75% to 5% range. After the rate hike, Jerome Powell, the Fed chair, actually made a strong case for why they should have done nothing, meaning paused. He talked a lot about the credit tightening that they think is, quote, quite real, in his words. In fact, he said directly that the banking stress of the past 2 weeks and related credit tightening has an equivalent effect of a rate hike and will weigh on inflation. Markets were happy with Jerome's comments initially until Janet Yellen said, quote, "We are not considering insuring all uninsured bank deposits," end quote, which spooked the markets. The comments were more hawkish than expected overall, and when asked whether he planned to lower rates in 2023, Jay Powell said no, so it was sort of a double whammy there. The Signature and SVB failures that kicked off the crisis continue to ripple through the US financial system. Over the past weekend, the FDIC said Flagstar Bank, a subsidiary of New York Community Bancorp, would take over large chunks of Signature Bank, including its 40 former branches, almost all of its depositions, and a piece of its loan portfolio. About 60 billion in loans and 4 billion in assets would remain under receivership. As for Silicon Valley Bank, Reuters reported that the FDIC planned to relaunch an auction process for what's left of the company, seeking a possible breakup. Turning to the US consumer, here are some interesting facts about credit cards in the US. 8 in 10 American adults, 84%, have at least one credit card. The total credit card debt in America is 986 billion, the highest it's ever been. There was a 61 billion jump in overall credit card balances between the third and fourth quarter of 2022, a 15% year-over-year increase. In fact, the current credit card debt balance has blown past the record of 927 billion set in 2019. There are around 218 million American adults with at least one credit card, and 48% of those with a credit card carried a balance at least once in 2021. So roughly 104 million Americans have credit card debt. 24% of Americans are relying on credit cards for more than normal to pay their bills, and 14% of Americans said they would have to put $400 in an emergency expense on a credit card and pay it off over time. The average credit card debt balance per borrower is 5,474 as of fall 2022. Please don't be like the Americans. And finally, turning to Amazon, Amazon will lay off another 9,000 employees over the coming weeks, the company said. These cuts come on top of the 18,000 layoffs the e-commerce and cloud computing giant executed between November and January, and some market observers think there could be more to come. Now for some bits and pieces. The global oil market is caught in the cross currents of supply outstripping demand at the moment. But with the prospect of the market swinging into deficit during the second half of the year when China is expected to drive world demand to record levels, according to the last oil market report. The current lackluster demand has resulted in global oil stocks building to their highest level in 18 months. Much of the supply overhang reflects a trend of ample Russian supplies racing to reroute to new destinations in response to the full force of the EU embargoes. The Swiss banking giant UBS agreed to buy its struggling rival Credit Suisse for about 3.2 billion on Sunday, in what's become the most dramatic development yet in the banking crisis that started earlier this month. While officials stressed that the takeover was a commercial solution to Credit Suisse escalating problems and not a bailout, Swiss regulators and central bankers paved the way for the deal to happen and offered billions in backup. The Swiss central bank pledged more than 100 billion to support the acquisition, while the Swiss government offered about 10 billion in specific guarantees to limit risks for UBS. The combined UBS Credit Suisse will have about 5 trillion in invested assets. On Monday, the market took this as a positive and rallied across the board, and of course, continued to do so throughout the week. And finally, looking at next week, there's still a few companies reporting their quarterly results. On Tuesday, we have Canada's Lululemon, Walgreens, and the cannabis Curaleaf. On Wednesday is Constellation Software and Dollarama. Thursday is BlackBerry, and Friday we have the Northwest Healthcare REIT. Economic events next week. On Wednesday, we have crude oil inventories. On Thursday, we have the US GDP report to see if they might have fallen into a recession. And on Friday, we have the Canadian GDP and the US Personal Consumption Price Index. Canada's federal government will put out its budget next week as well, With each annual budget, the question of increasing the capital gains inclusion rate from 50% to 75% comes up. It hasn't really come up strongly this time around, so I believe it's unlikely to happen. So that concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that in the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.